Hello everyone, good morning and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Wednesday the 17th of August. Now I've got 3 big charts for you today. We're looking at euro dollar, looking at the gold chart and the SP500 futures, big main charts. So let's get straight into it with the euro dollar chart. Now what we have seen is this recovery in euro dollar has been progressing, but at the beginning of this week it had, well, Friday it had a sharp bear candle and then Monday a really significant negative candle as well to break this recovery uptrend, and it's come right at the big downtrend. The 6-month downtrend of euro dollar has been hit and used as resistance, and it's fallen away. Now the market has also come back underneath 50 on the RSI. Now I want to point out this area here where we had this recovery in price, little mini attempted breakout, but then instantly pretty much rejected that move, then fell ever since. We saw that move above 50 and then it started to unwind. Similarly to what we're seeing at the moment, this move back under 50 and breaking the recovery uptrend seems as though that this is the point at which we start to see euro dropping back again. The support at, if I zoom in one more level, the support at 100.95 to 101.20 is being, it has actually held in yesterday's session and picked up slightly, but only slightly on the pickup. And I'm still looking at this thinking rallies are now a chance to sell, because you got on the 4-hour chart here, moving back underneath that 40 level is important, back towards 30, that suggests more corrective momentum. You've got the overhead supply that comes in around 102, big figure up towards 102.50 is now a basis of resistance, I think, and potential selling opportunities there. So I think it's going to be putting more pressure on that 101.20 down towards 100.95, and if that gets broken, then you're looking at parity and potentially 99.50 again. So I think that the negative momentum is starting to build once more on euro dollar for a potential downside break and then move towards the July lows again. Onto the gold chart, again a similar move where we've seen the stronger dollar, which has started to weigh on prices. Now we've seen gold price, silver price falling, oil prices breaking down as well. So all these commodities falling over in the last, certainly the last few days on precious metals anyway, having hit this resistance band. If I get the crosshair, you've got this resistance. It's sort of 1785 up towards 1805 was the basis of resistance of these old lows, and that is taken into resistance here in the last week or so as well. Market falling over, breaking this recovery uptrend, still holding above 50 on the RSI, so not decisively corrective yet, but if that RSI does fall below 50, I think that starts to look more negative. Looking on the 4-hour chart, a little minor support at 1783 was broken, and that could now become the basis of resistance, especially with these moving averages starting to turn lower. That's 21 period and 55 period moving average on the 4-hour chart. But I think that obviously that support in place at 1771 is important initially. Market ticking higher this morning, but if it starts to fail around that 1783 mark up towards maybe 1790, I think you start to look at a more corrective outlook building on gold. Below 1771, 1764 is then important. 1754 also as a higher low in the recovery. So if 1754 is broken, you really do start to build that corrective momentum to the downside, and then you can start to think of much deeper corrections. But for now, it's holding up, starting to look a little bit tentative in this recovery and starting to threaten the prospect of a downside break and a further correction. Finally, on S&P futures, well, we've been in this uptrend play for the last, well, 6 months to 5 weeks, and it's, look at the strength and momentum. RSI 75 on the RSI, really strong move on that momentum, and it really has been building ever since we've been broken out above this key lower high of that 4,200, which was the June high. We've also broken out above the 4,300 high back from April, so it really is sort of building this move higher. A near-term correction with the RSI at 75 is increasingly likely, but at the moment 1, 2, 3, 4, 5 positive sessions in a row. Again, with that situation, the potential for a correction near term, at least back towards that uptrend, is relatively high, I would say. But for now, it's not happening. But I think if it does do that, you've got good breakout support around that 4,200 area, and I'd still be looking at using corrections as a chance to buy, but just depends on how deep a correction would be before you get that support coming in again. But it certainly looks positive on this S&P futures for further gains. And if we go one more level back on the daily chart, you can see that breaking out above 4,003, where you're looking at 4,355, 4,500 as the next resistance. So I wish you good luck in your trading, everyone, and I'll speak to you soon. Thank you very much.